Assalamualaikum. We are from CS1123A Group 3. We'll be presenting about the building blocks of wealth. My name is Akalili binti Kari Aswan and my student ID is 2024692206. I will start the presentation of my part, which is Chapter 1. Investment can be defined as a sacrifice of present consumption in expectation of a better return in the future. The second point is speculation versus gambling. Speculation, it is for earning income in short term. It is by less analysis and most based on rumors. It is also willing to take high risk for high return. Lastly, it is gambling. It is for entertainment for very short term. The analysis is depend on luck and risk is much higher than return. The next point is investment, risk and return. Risk means the actual return may be different from what we expect. There are three risk attitudes, which is risk averse, risk neutral, and risk taker, the aggressive type. Other than that, return is the outcome or profit from the investment.
Hello everyone, my name is Sharifah Alia Nisa Badrisha binti Said Saiful Khaidir and my student ID is 2024402222. Today I will be presenting Chapter 2, focusing on market structure and regulators in the building blocks of wealth. Let me begin with market structure. A financial market is simply a place, physical or online, where people buy and sell financial products. Next, I will explain regulators. Regulators are official authorities that oversee the financial market. Their main roles are to protect investors, ensure fairness, and prevent fraud or illegal activities like insider trading. Strong regulation makes the market safer, more trustworthy, and more confident for investors.
My name is Siti Nur Fatimah Yusra binti Muhammad Yunus and my student ID is 2024275964. C. Trading mechanism. So the first one is trading procedure. The trading process starts when an investor decides to buy or sell a security. The investor submits an order through a broker or an online trading platform. The exchange trading system receives the order and looks for a matching opposite order, and a trade is executed when a buyer and seller agree on a price. The second one is order types. Market order, an instruction to buy or sell immediately at the best available price. Limit order, an instruction to buy or sell at a specific price chosen by the investor. Next, the third one is price determination. Security prices move according to supply and demand. And when demand is high, prices rise, and when supply is high, prices fall. So the market prices is determined at the point where supply meets demand.
Hello, my name is Nurin Shadia binti Faisal and my student ID is 2024226078. Now, I will be explaining Chapter 3, which is investment alternatives. We will look at assets. There are two main types of assets. The first is real assets. These are tangible assets. Real assets usually have lower liquidity because they take time to sell. Examples include land and buildings. The second type is financial assets, which are claims that organizations sell to finance their needs. Examples include insurance policies and bonds. Antique and chattels can offer high returns as their value increases over time. However, they require a lot of time to research. And the last one is gold. The advantage of gold is that it can provide high returns as its price rises. Disadvantage is that it does not generate interest or dividends.
My name is Aunida Rusha binti Abdurrahim and my student ID is 2024298054. And then we have treasury bills. Treasury bills is one of the money market instrument in Malaysia. The advantage is it is guaranteed income in the form of interest, and the disadvantage is large denomination. And then we have bonds. It is a fixed income security. The pros is steady income from interest, and cons is return is fixed, will not increase.